Hey, what's up, everybody? This video is part of a series of videos dealing with personal finances and personal budgeting. I'm going to put this same intro at the beginning of each video. So one, if you've already watched the intro, you can go ahead and skip to today's topic. Two, if you see my clothes change or the nice virtual background change, the reason will be because I recorded the rest of the video on a different day than I did this introductory video. So the point of this series is simply to do very quick, hopefully 2 to 5 minute videos where we discuss a lot of topics dealing with personal budgeting and personal finances. So I'm going to record all of these. I have probably over 20 ideas for these really short videos. I'm going to release one a day over the next 3 to 5 weeks. And if there's a topic that you want to hear about, please go ahead and post it in the comments. Maybe it's one that I have coming up, and then I'll release that one in the future. Or perhaps it's something that I haven't talked about or thought about on my list, and I can address that as I continue the series. So without any further comments, let's go ahead and jump into today's topic. Another frequent question when we're talking about personal budgeting is types of insurance. So in this video, we're going to very quickly touch on a lot of different types of insurance, which ones I think are most important, which ones you could potentially put off until you have the extra money to take on or to purchase that insurance. And so let's jump right in. So as I've said in some of the other videos, I'm not a registered financial advisor. I do not give investment advice about specific things to invest in. I'm also not a licensed insurance agent. So I am just giving you my personal perspective on insurance, what I've learned through the years and what these different types of insurances are. So you definitely need to reach out to a licensed insurance agent to get more specifics. So let's cover the general types of insurance. There are the insurances that you're very familiar with. You have a homeowner's policy when you own your home. You have a renter's policy if you rent your home. You have car insurance. You have life insurance. You have disability insurance. And those are, off the top of my head, kind of the 5 most common types of insurance. Now, inside of each of those categories, you may have varying types of insurance as well. For example, life insurance. With life insurance, you can have a term life insurance policy that basically just lasts for a set amount of time. A 20-year term policy would last for 20 years as long as you pay the premiums. If you die within those 20 years, you will get life insurance. However, at the end of those 20 years, there is no option to continue paying for that insurance without getting a new policy. It would end and you get nothing. So you've paid those premiums for the protection against dying. And if you don't die, that was the cost of that protection, and there's nothing that you get. Whole life insurance, there's a couple of different terms for this as well, but whole life insurance essentially is for your whole life. You will pay premiums, and whenever you die, no matter what age, no matter how long it takes, that policy will pay out. Now, a lot of people don't like whole life insurance. Dave Ramsey is one of them. He actually thinks that this is an absurd product, that probably the people who sell it should be in jail. I mean, he is very, very adamant against this. I personally don't have whole life insurance. I don't really like it. I think that you can find a better use for your money. There's a investment component where I think you can get better returns outside of whole life insurance. I think that if you buy term insurance, the cost of that is cheaper and you can invest the difference and probably do better. I'm not saying that that's 100% the case. I think there are times where whole life insurance definitely makes sense for some people. I think that that's probably fewer people than the majority. I think that most people would probably be better off with term life insurance. But that's just, again, a personal opinion. But I'm also not as adamantly against whole life insurance in every single circumstance like Dave Ramsey says he is. I think there can be some cases maybe where you would want to utilize that in your portfolio. Renter's insurance. You may think that you don't need insurance if you rent because it's not your house, it's not your apartment. And so what are you going to be out of pocket? Well, first of all, they're going to make you get it. So it's not like you're going to be able to go without it because they're not going to rent to you without it. But renter's insurance will cover your items, which are inside the house. So if something happens to the rental property, well, the person who owns the property would need to have owner's insurance to cover the property itself. But for you, your clothing, your furniture, your items that are inside the home, you need insurance to cover the loss of those items if something were to happen. This is very important too, that I don't see a lot of people do, or they don't necessarily think through it. When you live in a home, that's one type of homeowner's insurance. If it is a vacant home, maybe it's a beach house that you have that's a vacation property and no one is actively living there and you're not renting it out. It is your second vacation property and you go there every now and then on vacation. That's a vacant home. That needs a policy. Your insurance provider needs to know that that home is vacant. Also, if you rent out a property, your insurance provider needs to know that is a rental property. Those are different types of policies. If you have a homeowner policy and they write it as if you live there and you don't, when something happens, a water leak has been leaking for 2 weeks and no one knew about it because no one lives there. They're going to come in and they're going to ask why you didn't have like a vacant insurance life homeowners policy. And you run the risk of them not covering the loss because you didn't have the right type of insurance. So when you own a property, make sure you give your insurance agent all the information. I had one time who told me to not tell him all those details because now he was going to have to write a more expensive policy for me because the property was vacant. And I said, look, I don't care if it costs more because if something happens to the house, I need the insurance to pay out. I'd rather pay more for it and get the payout if something happens. I mean, that's the whole point of insurance, right? It's to protect you against this catastrophic loss. So get the right policy. That's a very important piece when you're talking about real estate that you own. Make sure that you let them know who's using it, how it's used, so that you get the right policy so that the insurance agent doesn't come in and somehow, not the agent, but the insurance company doesn't somehow come in and find a way to not pay out. Disability insurance can be short-term, it can be long-term. I know the one that I have, I can pick for it to start paying out. It's long-term disability, and it will either start paying out at 13 weeks or 26 weeks. I chose the 26-week option. We figured that emergency fund will cover anything between the initial disability and the 26-week mark. It's cheaper when you get the longer waiting period. So I would say, set up your emergency fund and then pick the longer waiting period. That's another piece here too. Deductibles. I set my deductibles as high as possible. Yes, if something happens to my house, I'm going to have to come out of pocket $2,500 because that's what my deductible is. Someone else might have a deductible of $500. And when you look at it on the surface, hurricane messes my roof up, messes the neighbor's roof up. I'm going to be spending $2,500. He's going to be spending $500. But what you don't think about is the increase in premiums. Most likely, I'm not going to be cashing in on my insurance policy. I mean, it's an insurance policy. I'm not planning to use it. If I have to, it's there. I have an emergency fund to cover the $2,500 if I need to, but I'm not planning on using it. So I set my premiums high to drive down my cost of the insurance because over time, yeah, he has a better deductible and he's going to come out of pocket less if his roof blows off. But over time, he's probably going to spend a lot more money than I am paying higher insurance premiums for a lower out-of-pocket deductible. Back to disability. So disability insurance, it pays if you are no longer able to work your job. Another thing that I have discovered just in my own personal policy is I have something that's, I don't know what they call it specifically, but it's like same occupation. So if I get injured and I can no longer do tax work or accounting work, my disability insurance will cover me. There are other disability insurance where they will say, we're not going to cover you because you can still work. You have to be completely disabled where you cannot work. So it's going to cost a little bit more. But in my opinion, I think you want to get that same occupation because if you are in an occupation doing one thing, you don't want to be forced to have to take on a different type of work when you get disabled and can't do the type of work you do now. So definitely ask your insurance agent about that rider and get that type. In my opinion, I think that's well worth the money. Car insurance, I think that's pretty straightforward. I mean, you're gonna have car insurance. It's a requirement. I mean, there are drivers out there without it, but if you're going to drive legally, then you're going to have car insurance. You've got the different limits. Sometimes if you're going to have an umbrella policy, we haven't covered that. An umbrella policy is kind of what it sounds like. It's an umbrella that covers you no matter what happens above and beyond your other policies. So for instance, if you have a car insurance policy and something happens, it's your fault, and the liability exceeds the amount of what your car insurance covers, the umbrella policy would kick in and cover the excess. So look into that. Ask your
insurance broker about that as well. So with the car insurance, kind of back to that, I got sidetracked on the umbrella insurance. You just want to make sure that you have enough coverage. If you have a business, you're going to want some sort of insurance. For me, it's errors and omissions insurance. I get it through the AICPA, but it covers me in case I make a mistake on a tax return or a client sues me. So business insurance is one. Health insurance, I don't think I mentioned that at the beginning, but of course, health insurance is there. I think that, you want to make sure you have that. Again, to me, insurance, all of it is catastrophic. I'm not using it to get ahead financially. I am purchasing insurance that will cover me in a catastrophic event. My house burns down. I incur $200,000 of medical expenses after getting in an accident. I'm not looking for my insurance to cover my doctor visit when I get sick, or even really the emergency room if my kid breaks his arm. Yes, that's going to be expensive, but I have an emergency fund if I need to tap into that. I'm looking for my insurance to cover things that are catastrophic and would bankrupt me, would financially ruin me. That's what I personally am using insurance for. I mean, I'm not making any sort of recommendation here, but that's just what I personally do. And you need to evaluate how you use insurance and talk to your insurance agent about your priorities and your goals and how you would like to utilize these types of tools when it comes to insurance.
My name is Brad. I'm with Wooten CPA. My goal is to bring peace to your tax and accounting responsibilities. One of the ways I do that is through these videos here on YouTube. Please like this video, share this video for others to see, and subscribe to the channel if you would. That way, you're also notified when new videos come out. There will be over 20 in this series of personal finance and personal budgeting that I'm going to try to keep in that 2 to 5 minute window, so they'll be easy to digest for you. Hopefully that they are helpful for you, and I appreciate you watching the videos.